Good evening, everybody. Thank you very much for joining in. This side, Rahul Magan here as the Chief Executive Officer of Treasury Consulting LLP. And today we are going to speak about very interesting topic which is happening across the globe, which is anti-money laundering or threat of anti-money or rising threat of anti-money laundering across the globe. As you very well understand that anti-money laundering is going very far, and all the central banks across the globe are very much concerned about anti-money laundering. A lot of talks has been happening. Happening about anti-money laundering as well. And with respect to all these, recently a case has been happened pertaining to anti-money laundering, which is the case of Wells Fargo. Now, what had happened in the case of Wells Fargo? Now, this is not the first time that Wells Fargo has been prosecuted. Lot many times Wells Fargo has been prosecuted. Now, what had happened that probably few weeks ago, Wells Fargo has been fined by approximately $185 million by US prosecutors regarding creation of unapproved account. All those who are listening to us must be thinking that what do you mean by unapproved account? So in the parlance of the regulators, unapproved account means, example, you are a person who lives in New York, and without having your approval, Wells Fargo created an account in your name, in your system, and start remitting the money pertaining to that account. In fact, Wells Fargo not yet stopped here. What they did, they moved ahead and they started creating so-called fake credit cards and fake debit cards as well. So the complete chain was there. Now, when regulators get to know, as you very well understand that regulators are always sleeping. So, whenever they will get time, they will do the same. But as soon as they got to know that Wells Fargo has been involved in such kind of activities, they had taken an action and put a fine of $185 million on Wells Fargo. The most important point here to understand is not the $185 million of the fine, but rather the complete modus operandi of the same. Now I'm going to read few things about modus operandi. Wells Fargo will pay approximate $185 million to resolve claim the bank employees opened deposit and the credit card accounts without customer approval to satisfy sales goal and earn financial rewards. The lender opened more than 2 million accounts that the consumer may not know about. The Consumer Financial Protection Bureau said in a statement on Thursday, which is the last Thursday. Wells Fargo, which fired approximately 5,300 employees over the improper sales practices, agreed to pay a record $100 million to Consumer Protection and approximately $35 million to Office of Controller and $50 million to Los Angeles City Attorney. Total stands at $185 million of fine. Wells Fargo employees secretly open unauthorized account to hit the sales target and receive bonuses. The best part is that a lot of scam has been happened in the bank post 2008. We saw electricity trading scam, we saw the scam in the fixed income markets, we saw the LIBOR scandal, we saw huge amount of scandals. In fact, nowadays I must say that if you are opening a newspaper in a day and you are not finding a scandal, it means something or not is not going good in the system. Irrespective of that, the bank has not bolstered their systems. Bolstered means to make things very technical, or to make things in such a way that you may not be able to do such kind of fishy activities. Rather, in 2014, the same Wells Fargo was fined by $100 of million regarding an anti-money laundering case. They learned nothing from the same, and seriously, regulators also nothing from that. So in 2014, you are fining a fine of approximately $100 million pertaining to the open flounce of anti-money laundering practices. And then what you did, then again in 2016, the same employees of the same bank created unapproved accounts, and in the unapproved accounts, it is just mentioned in the media that they created unapproved account and unapproved debit cards and the credit cards. But I'm sure that there are millions of dollars of transactions which has happened through it. And when we talked about millions of dollars of transaction, I'm sure that there are a huge amount of anti-money laundering has been involved into the same. But yes, we should also appreciate the fact that media is always silent. Media do not want to open such things. So we need to guess it out that how much amount of money involved. But if we apply a common sense, then 2 million accounts were involved. If in 1 million, if in I would say, if every account is having more than $5 million of transaction, then 2 million account into 5 million, then you can very well understand how much billions of dollars of the trade which has been done without even notifying the customer. Thousands of employees at the Wells Fargo were involved in opening accounts, point number 4, and moving funds that resulted in the customer getting charged free for a service they didn't seek, according to the regulator. Lost as the city attorney Mike Fern sued Wells Fargo last year and accused bank of high pressure quotas for the work that encouraged them to skip the rules. And very important point, the financial industry regulatory attorney slapped Wells Fargo advisors with 1.5 million fines for failing to comply anti-money laundering requirement. Over the course of 9 years from 2012 to 2003 to 2012, the firm failed to properly vet some 220,000 new customer accounts by doing the necessary identity verification. FINRA said the error was a result of the design flaw in the firm transaction processing system, according to the statement, and so on and so forth. So we learned nothing out of it. To be very honest, we learned nothing out of it. A lot of banks are doing this and everybody is doing that. We learned nothing out of the same. Moving forward, this is what we made for you. Now there are a lot of bank anti-money laundering cases that has happened across the globe, and here we are going to list few of them for your knowledge. We are in the last few years, banks were charged with a lot of cases covering anti-money laundering. Singapore, Monetary Authority of Singapore, case of BSI banks, US regulator Wells Fargo case, Mega Bank case of Taiwan in Panama scandal, and Indian banks doing a huge amount of anti-money laundering, which is Bank of Baroda and others. Now what did happen is, now note the point: Singapore MAS, US regulators, Taiwan Mega Bank, Panama scandal, Indian Bank of Baroda, State Bank of India market caps, SBI, Malaysian Prime Minister IMBD case, which is approximately a $1 billion case. Growing anti-money laundering by the bank is not a bright signal for the regulators. Sitting today, banks whether US, European, Asian, Indian are particularly in the anti-money laundering in a big way. Regulators need to understand that they need right set of technologies to prevent the same, which is electronic banking account management. Yes, we strongly understand the fact that Federal Reserve has made a lot of changes in their rules and regulations, wherein they are asking banks to submit their books. They wanted to know how much balance, and one of the few is the F bar. There are a lot of steps which which international regulators are taking, but at the same time we need to understand that these steps were decided long ago. These steps are not going to work now. We also need to understand that banks are getting very smart, and anti-money laundering is the way through which you are able to remit the money. Now, one bank which we not mentioned, because we already covered a technical case study on that bank, which is Deutsche. Deutsche did the same using mirror scanning, using mirror swap. So you are having a Russian trader who is going to buy these stocks in London of Microsoft, Google, Apple, and all big companies, highly tradable, not non-liquid stock. The profit and loss is not a concern. The concern is to convert the rubles into dollars, because that is what the anti-money laundering. Once the London would open, then you would convert the same. Then you would convert the same into dollars. So basically, what you did in nutshell, you converted your ruble funding into dollar funding without any restriction. And gain loss on buying shares is not a problem for you. So that is something which we need to understand, that such kind of anti-money laundering cases is getting very rise. And what Wells Fargo did this time, whereby they themselves saying that they did, the total number of accounts involved were 2 million, and over more than 5,000 employees were involved doing that for a longer period of time. This is something a serious concern, and henceforth the purpose of the video. It may possible that over the period you will get to know a lot of people, a lot of banks who are doing this. This is something of serious concern. I should think that we as a strategy consulting LLP think that regulators should be very proactive in nature. They should think beyond convention, and we should use lot of technologies which help us to mitigate such frauds. Example, EBAM, electronic banking account management, and respective others. So this was about that, and before winding up the video, I would like to just summarize it that I think as per the Bloomberg TV, Singapore Monetary Authority of the Singapore is also very interested in bolster up the anti-money laundering requirement, because the incident with the BCI bank is not went very well. So a lot of things which is happening on that front, and I hope over the period of the time anti-money laundering would be mitigated. But sitting today, it is approximately 2% to the 5% of the GDP of the globe. So of the global GDP, it's in trillions of dollars, and of course between 2% to 5% of the money is anti-money laundering. So you can very well understand how things work in anti-money laundering. So you are speaking to Treasury Consulting, and as you understand that Treasury, the very first step in understanding the benefit, you need to in the next basically slide, we are talking about a model. In the first step in understanding the benefits of the model risk management, the validation is to understand what models are and where they exist in the AML program. A simplified interpretation of the definition of a model found in the supervisory guidance on the model management is use the mathematical technique to provide output. Because we as a Treasury Consulting LLP believe that rather than making small guidelines on anti-money laundering, you should create a model wherein you would have input variables and you would have output variables, and you would be able to understand how things are happening. But at the same time, we should very well understand that making financial model for every country is not easy, because you would have a humongous amount of input data to check the pattern of anti-money laundering here and there. Last but not the least, where models exist within an anti-money laundering program is the part driven by the exact definition of a model within your institution. Could be bank, could be central bank. However, the broad definition of the model and the elements of a sound model risk program will apply across most areas in the anti-money laundering. So we suggest that since anti-money laundering is growing, so you should have a model in that regard. But at the same time, we also suggest that having a model is not easy, because you need a huge amount of data, and majority of the central banks are not in a position to have that amount of data. Quantitative wise, they might be in a position, but qualitative wise, I strongly doubt they are in a position in that regard. Henceforth, this is also a challenge for anti-money laundering. Last but not the least, this is a domain of Treasury Consulting LLP. We are having publication domain, knowledge commerce, your trainings domain, corporate and management consulting, auditing, risk and assurance, accounting domain, BTech and FinTech. This is our brand foreign exchange every thinkers has been to. You're on Dailymotion, Dropbox, LinkedIn, YouTube, WhatsApp, Twitter, Telegram, SlideShare, everywhere. And we have banks, financial institution, corporate and education institution as a client. You're welcome to join our brand foreign exchange every thinkers on LinkedIn, LinkedIn FX Club, YouTube channel, Dailymotion, derivative groups on WhatsApp, Basel 3 groups on, and Foreign Exchange Academy, Skype, Google, WeChat, Snapchat, and SlideShare. You're most welcome to connect with us, and I hope you like the video. In case you have any consulting assignment, you're always welcome to connect with us. We are a consulting company. Our website is on the way. Probably, I think by end of September, our website would be there, which would be very fancy and very nice looking. I hope this video served you, and over the period we would continue to present a lot of technical videos about anti-money laundering, fraud, forensics, derivative, foreign exchange market, compliances and all. We as a Treasury Consulting LLP is also coming up with the GRC Club, which is Global Risk and Compliance, and this GRC Club would cater the need of all the big short people when it comes to their compliances requirement. With this, we thank you very much. And this side Rahul Magan from Treasury Consulting. Thank you.